11:20 a.m. Pacific Standard Time, 5/18/2014. We are going to present to you today Amazon.com again. And that when Amazon was up here at $408, listen, 2013 didn't matter what Amazon did, bad earnings report, they just went up. Yeah, they went up so they could get short for the calendar year. Who knows if Amazon will get back to those 52-week highs, just like they did in 1999, 2000, early 2000. Amazon was quite a high flyer then, and it was a high flyer going into 2008. And we said the overbought was there and whatnot, and we have support down here, and that support level is down here where the lows were. Let's just say that that low was $287. Let's just take a look. At $408 up here at the highs, we told you Amazon was going to end up in a bad way, and they always do. All of these leadership pump and dump with supercomputers and high frequency. See, people got left on the hook of owning Amazon way up there, just like they did back in the dot bomb days and the 2008 days. Same thing, just a different year, different time. That's all. You're welcome to go to stockmarketfunding.com. All of the MMTs, I'm telling you to go put it in the search, and everything that we talk about on Amazon or related to Amazon will be here. And the live videos and the live trades. Yes, it will. Go through them, click on number 2, and once again, that search feature will bring up Amazon at different times, different dates, different years, and everything that you want to know historically is here. And what makes it very valuable is that it was done in real time with real trades. Yeah, it was. And you got a slew of Amazon trades, both long and short. And I am telling people now that you're not going to see that high on Amazon. And that Amazon is going to have an extreme pressure with other high-tech industry style stocks. Listen, Amazon's net profits are shrinking. They're still doing exceptionally well, but why Wall Street or the high-frequency computers got away with what they did? That bull is suffering on Amazon right now. And yeah, you go take a look there and what we told you. Now, let's just take a look at a trade. We're down here at a major support level. If this support level is breached, well, let me blow it up for you. Here you go, MMT. We're just going to take this piece where that blue line, the 10 minutes holding it down, that 20 minute is also sloping down, the 40 and the 50 are sloping down. What does that mean? That means that any up move in volatility, you're going to be shorting that farm. They will not be sustainable within the trend cycle period. End of the story. This is a high right here. Here is a lower high on this daily bar right here. We got that high put in, but here's that one. We're hitting on that wall of resistance on the low of this bar right here. And this bar right here was on what? 5/14 of 2014. You can see the short-term rallies and then again that rollover. Amazon is in a deep sell signal. That means every stock will get a bounce off of their lows. But hey, the people who try to stay more than a couple of days, you're going to go down lower. Now, having said that, this stock has had a great pullback, over $100 and some change. And, 2013, in our view, high frequency was the biggest pump and dump scandal in the world, right before your face. And the thing about it is, the public is always stuck holding the bag. And people that chase stocks because they're going up, they get stuck up here at the highs. So basically, we bought some more put options for the gap open down on Monday, tomorrow. And that was the $300 put right here. We have 10 of these contracts right here. That means that the resistance levels are down here, are right here. I'm just going to go back to this area of the chart. So, any up move, we're buyers for more. We got that entry at a reasonable price. With a declining 10-day simple moving average, you're going to go lower. And at some point, when it does finally look, these are oversold levels that you haven't seen in Amazon for a long, long time. This is about as oversold on this daily movement average convergence divergence. The public looks at it, and we teach you to look at how the public thinks versus a market maker. It has not been, well, let's don't say, I could say it hasn't been that oversold for all of these years right in here. It's really got down here where those support levels are good for bounces, but you wouldn't want to really hold that overnight. It just means it's a good day to trade off of the bottom. And the $300 put that we have here, again, we've already traded that contract successfully a couple of times. This is that resistance, half bars about right here and whatnot. The lower end of this bar right here is 290, and then of course we have an area down here that we would be looking at, and that would be around that 287 level. And what this overall trend, look at when it gets sold off, look what it does. It has a rally to make a lower low. It has a rally to come down, but this low was not breached yet. And the trend cycle was an oversold short-term condition. However, we're in it because that support level is broke. We make a lot of money, and if we go up in price on the opening bell where the major resistance levels are, we make money. And this is the yearly update on Amazon from stockmarketfunding.com. And if you were the public that got chasing this stock up there at these highs, hey, I'm sorry that you are. And a lot of people are. That's the nature of the beast. And you got to remember that this was a pump and it was a dump. That pump and dump happened again, and investors and traders are out there on a limb.